Hello everyone. Welcome to another QuantInsti webinar. And topic for today's session is understanding financial market behavior, the role of multiple categories of data. We'll be joined by three distinguished panelists in this webinar, and you can see them all here. And let me just do a very quick introduction. So our first panelist is Professor Gautam Mitra, who will be the moderator for today's session. Professor Mitra is a founder and MD of Opterisk Systems. He is an internationally renowned research scientist in the field of operational research in general and computational optimization and modeling in particular. Our second panelist is Dr. Ernest Chan. Dr. Chan is the CEO of financial machine learning firm PredictNow.ai and is an award-winning quantitative hedge fund manager and acclaimed quant finance author. He was previously a machine learning researcher at IBM TJ Watson Research Center and Morgan Stanley, and a proprietary trader at Credit Suisse. Our third panelist is Dr. Matteo Campellone. Dr. Campellone is the co-founder and executive chairman of Brain, a company focused on developing of algorithms for trading strategies and investment decisions. He holds a PhD in physics and a master's in business administration. Dr. Campellone's past activities include financial modeling for financial institutions and corporate risk and value-based management for industrial companies. As a theoretical physicist, he worked in the field of statistical mechanics of complex systems and nonlinear stochastic equations. With our introductions done, welcome to today's session, gentlemen. And before we start with today's session, we'll be conducting a Q&A at the end. So I would request everyone to put their questions in this panel, and we'll try to pick as many questions as possible. And also note that this session will be recorded and will be available on our YouTube channel. And now just allow me to make Professor the presenter so he can share his screen and go ahead with the discussion.
Okay. Hello, welcome. Good morning, good day, good evening, depending on where you are. You're from different parts of the world. Okay, I'm going to show my screen. So I'm very pleased to be here to share with you not only what we do, and also address the main issue of financial markets and the role of data, but also I'm very pleased to introduce two of my panelists who have a lot of experience in trading. They have both been traders themselves, and not only they are distinguished in their academic career, but they are also got really hands-on experience. Now, let me share the screen and tell you that this is the topic. After all, this is really about certificate in sentiment analysis and alternative data for finance, CSAF. This is a course that Opterisk System, together in partnership with QuantInsti, offers 3 times a year. And this particular webinar is about understanding financial market behavior. Now that's an important thing. The cognition of really understanding how it behaves is important. People used to do that from information regarding market prices, various derivative prices and so forth. But in recent times, the role of data and data of multiple categories have become very important. So that is the focus of our, if you like, webinar today. Now, let me step into a bit more into the subject. So it is all about financial market behavior. Now, how it goes up or down, or how people react based on what's happening in the market is quite important. because there are various participants in the market. This will come to in a minute. Incidentally, what I'm going to say in particular now, is nothing new. It's all known in the field over many, many years. It has evolved. But what we are doing is providing you a particular perspective of how they have come together in recent times. Now, data is very important. In the early days, the only data that was available was the market prices, and then it became what happened at the exchange, the buy order and sell order, the buy price and sell price, or it could be even the depth of the book, how many the buy orders and sell orders were there. So that was the only information that was there. And what are the in order to put it in the context, I'm going to set out why want to know the behavior, because there are two major problems, or major, if you like, activities that goes on in the market. Namely, one is to ex-ante asset allocation, that is portfolio planning, or more, higher frequency and lower latency case, daily trading. So trade portfolio construction, buying and selling of assets on a daily basis or even intraday basis. But for the moment, we are concentrating on a daily trading strategy. Or as well as the ex-post risk control. You might be doing your trading in one way, but there will be other team looking at your risk control and how that carries on. So these are the two dominant problems in the market. Now, of course, there is very well-known hypothesis called efficient market hypothesis, which more or less says that market ultimately digests everything. All the information coming in from prices, from news, announcements is digested, and it comes to an equilibrium, and that is the market. Now, so why do we need, data? What do we need to do some extra activity? The answer is that although the market is on long-term efficient, in the short term, there are various market inefficiencies. And therefore, and there are people who add to it, like noise traders, who just see the news and immediately they put some, buy or sell order. So given that situation, the question is, how do we, find new alpha? However, our discussion today is about data. So let's see why it's important. Now, if you look at the scene that was in 2007, when just about news analytics was becoming important, this is the main market participants. There are customers, there are institution investors, investment managers, or retail customers, there are broker, dealers, and market makers. This whole ellipse contains the mainstream market participants. Then there is retail brokers, market makers, and they all interact with exchange. And here's a list of people who are the participants, like trade portfolio or institutional investors and quantitative traders, etc. And I call it tertiary market participant because in addition to people who provide market data, and that's a big game, big deal, you also have people who provide news data. And indeed, their importance has grown and grown in, if you like, advanced way of trading. And so that's what it was in 2007. Now it has changed dramatically by the time we have to come to 2020. Because in addition to the news data providers, there have been also media sentiment data providers, microblogs or Twitter data providers, and now in the last 4 or 5 years, alternative data providers. And indeed, my colleagues other panelists will discuss some of this, but alternative data is really rising and rising. But also what's more, the AI and machine learning part in alternative data, or in general, in the data scene is becoming important. Also, in the scene of investment funds, if you like, fund managers, the rise of socially responsible investment or economic, social, and governance items are becoming big. So, so that more or less describes the scene, and we are going to unravel the data according to this. Now, with these words, I want to hand over the discussion over to my panelist colleague, Professor Dr. Arnie Chan. So over to you, Arnie, to take on the baton from here.
Thank you, Gautam, and thank you so much to QuantInsti and OptiRisk for inviting me to speak today. So I think that I like to look at data from a new lens that has been proposed by an AI expert, Dr. Marcus Lopresti-Prado. He proposed that this lens is called causal investing. Now, causal inference is not new. It has been around in econometrics since the 1930s. But its recent introduction to the financial economics context is fairly refreshing, I would feel. Traditionally, in finance, we are looking for statistical associations between.
Prof, you are not sharing the slides. We are able to see the folder. So can you share the slides, Prof?
No, I actually was not aware that I should have slides, because I thought this is a panel discussion. So I did not have a slide prepared for this session.
Yeah, I'm referring to Professor Mitra. Professor, yeah, we are back to the slides. Yeah, thank you.
Oh,
is this the slide you wanted?
Yeah. We were able to see the folder. Okay, so that's why. So yeah, now we are able to see the slides. Thanks.
Great. So so now how is so like I said, traditionally people like us quants analyze the correlation between different time series. We say, oh, Apple and Google seems to be correlated in their returns or co-integrated in their prices. We say, let's pair trade them, buy one and short the other if the spread is wide. Or we look at the lack of autocorrelation between two periods of return. And in a mean reverting strategy, if one period is positive, we will expect that the second period will be negative. So we had a mean reverting trading strategy, or vice versa, if it's some trend following strategy. But all these statistical correlation are, in a sense, data mining, because you have no idea why these associations is there and whether they will persist. Now, however, with this new alternative data, we have a way of really understanding, in a much deeper level, the causal relationship between the predictors and the target label. For example, one of my favorite example is intraday mean reverting strategy, which intraday trend following strategy that we call tail ripper, that we traded in our fund QTS Capital. So this strategy, is simply saying is that if intraday the return is high, go long because you expect it to trend. But they sometimes fail. This strategy sometimes fail, and it is worthwhile to understand under what conditions this strategy fail. And to do that, we need alternative data, and some of this alternative data is to drill down into the options activity of the market. Are people buying call options? Are people retail in particular? Are retail trader buying call option, or is it mostly institutional trading? So these alternative data give us the opportunity to look deeply for the causes of certain price movement. And once you understand the cause, it's not just for academic interest, because if you understand the cause, you can use this kind of alternative data to decide if today is the day you should run your strategy. Because if the causes are not there for today, your strategy may not work. It will, I think, improve greatly the accuracy of these trading strategy given a deep level of understanding via alternative data. So that's my take on this topic.
Okay, so thank you again to OptiRisk and for all of you and to Professor Mitra for inviting me. Okay, so I will continue from the point of view of data, which Gautam Mitra was hinting at before. Of course, data is of crucial importance in the market and for market operators. And as we said, alternative data is a large part of the interesting data today, and it's an ecosystem which is constantly growing. So quick introduction, which you already gave of myself. I am founder and executive chairman of Brain. Brain is a company focused on the development of algorithms for trading strategies and for investment decisions. We also create alternative data sets based on processing of alternative sources. Typically, we process news sources or documental sources. So I'm saying this because we, for this activity, we operate in the context of alternative data, and the general context is the following, very roughly speaking. So investors are constantly looking for new sources of information, and new sources of information is constantly more and more available. So this ecosystem of what is called alternative data, and by that we mean I would define alternative data as any data which is potentially employable for understanding something about the market and is not already an industry standard like market time series, market prices, or economic data. So with a very loose definition, this ecosystem is constantly growing. I mean constantly growing because there are new players, new providers of new vendors of alternative data sets. There are platforms which gather together alternative data vendors and put them in contact with hedge funds or investors who are interested in understanding if they're and gathering alternative data and understanding if some of them may be useful to them. Like Mr. Chan was also hinting at the fact that in the usage of some of his strategies, some alternative data might be useful in understanding whether that strategy is good to use at that time or not. And I'm curious to know a little bit more of that in the discussion. In any case, so this ecosystem is largely growing and is projected to grow a lot. And it comprises, just to give you an overall view, but this is very easily available everywhere you look at, on the internet, on any, or even in the handbook of various handbooks of alternative data. It can go from credit card transactions, satellite images, mobile device data, weather data, usage of applications, of apps on the mobiles, and so on. A large portion of alternative data is based on textual documents. And we do so at Brain. We process textual documents through natural language processing tools, which is also an area which is fastly developing. For instance, an example I can give you is we have a sentiment indicator on stocks and other asset classes. And this means that by processing news, you can define an algorithm that assigns a score to each piece of news, if it's positive or negative, and then tags that score, that news to the company to which it is related. I'm talking about financial news and specifically. And this can be consistently provided daily to investors. And so investors might be interested in using a sentiment indicator over a number of assets to complement their investment strategies or to create a specific investment strategy based on that. Another application that I want to quickly talk about of natural language processing on some textual documents that can be then help you create an alternative data set is if you apply natural language processing metrics or to corporate documents. For example, company filings that the US companies have to file to the SEC. We can score them and see how similar they are to the previous one, how positive they are in terms of the language that they use, how negative they are, how their language is litigious, meaning it contains sentences related to legal issues like class actions or any kind of legal activities, or how uncertain the language is. And by using this metric, you actually are able to transform an unstructured source, which is a textual document or a piece of news, into a structured data set, and so ultimately into a time series. So the process is a very, very high level, is rough of using alternative data is very roughly the following. First of all, you have new sources.
Can
you hear me?
Yeah, we can hear you now.
Okay. I mean, first of all, you have new sources. So as an investor, you might want to look for new sources of information which you are not so available to everyone, just to have an edge with respect to other investors. Then there is a part of embedding these new sources and transforming the unstructured information that you have into structured data sets. This is something technical, but it's important that you have, in the end, you end up, especially if you want to run a systematic strategy, you end up with a structured data set with a clear timestamp for each information that is on that data set. And that data set may contain several features, if you want to talk, speaking in the machine learning word. After that, having that, you can create an investment strategy, either top-down, so based on an investment decision idea. So I say, for instance, that if that feature is so and so, I would buy that asset or not, or based on or create a machine learning model system that learns from patterns in the past and try to correlate to the behavior of the target in the future. So that's two different approaches. I would say bottom up or top down. In any case, you have a sort of investment strategy out of it. And then there is the validation. Yeah, Gautam, do you hear me well? Because I see you raising your hand.
Very
do you
good.
hear me well?
Yeah. Shall we move on to some? Sorry, go ahead. Go ahead, finish, Martin.
Last 30 seconds. I'm just saying that last part of this very macro level flow is the validation part. So once you've created your own strategy, it's crucial actually to understand well how you validate your idea. And this is obvious, but I'm stating the obvious, but I've also seen very rarely people discussing on how reliable is your validation, and for example, how statistically significant your validation is. A crucial question that we ask ourselves when we have a created use case is how much this result could be due to a random fluctuation, or how much is it a consistent signal. So anyway, these are at a general level, a macro flow that I would use to describe the usage of alternative data.
Excellent, Matteo. Hi. I picked up the last comment you made about validation. And indeed, it's one of the difficulties of alternative data because there is not enough history. So if you want to do back testing, and indeed you want to do, there's various types of alternative data like the, if you like, A data of the IoT devices, which is not available earlier. So that is one of the difficulties for backtesting. And so that's something maybe you could, both of you could answer to that. The next thing is, I would like to point out, we do it in our course, that only using alternative data or only using data that, like sentiment data, to make a decision about asset allocation or risk control is fraught. Because after all, market data is king, meaning it gets digested. So in creating models, one should not only use the alternative data, but not forget the market data. The two have to go together. Now, one other comment, and actually this is where Annie will comment very much, is that data, alternative data, or different categories of data, which was the topic, are used now with AI and machine learning in two different contexts. One is on its own to do asset allocation. The other is to create AI and machine learning models using these data so that you could predict market directions. So I think there are multiple ways the data is, if you like, captured or rather exploited. So Arnie, can you come in and comment on that?
Well, in my view, like I said earlier, the alternative data has become increasingly important as a cause rather than the effect of any investment strategy. So many, for example, previously many technical traders would say, well, I don't need to know all this company earnings. I don't need to know what the CEO or executive say in an earning call. All I need to know is, did the market go up or down, prior to today? And I would trade based on, whatever 120-day moving average and so forth. But that kind of association, as I said, is very tenuous. And I think but of course previously there was no other way around it other than public information that are at very low frequency, such as earning and announcement or analyst calls. Those happen once every 3 months, and it's not really adding any value because it's so outdated oftentimes. By the you can't trade only once every 3 months. So but with the advent of these sort of alternative data and machine learning, of course, one can incorporate a lot of these alternative data to really understand the causes of returns. And I feel that is going to lead to much more robust strategy, especially if you apply the causal framework on discovery.
Yeah. Okay. Martino, you have a comment about the difficulty of historical data and
yes, I think that this is a very crucial point. By definition, alternative data is alternative because you didn't have it before. So you don't have a long time horizon you don't have a nice 10 or 15 year or even longer time series to back test. And there is an additional problem, is that the world is changing faster on alternative data, meaning of course the world is always changing, and this is a problem of every back test to say that it is representative for the future. But alternative data, they are also gathered in a different way. There can be more data in the recent past than in the oldest past. So even to decide how consistent a time series of data, I'm just speaking very generally because then it would depend on the data, is difficult to say. So somehow there is a little bit more of a leap of faith that you have to do when you want to embed some alternative data in a strategy. For example, you can have a not too long time horizon history, but also knowing the fact that those data were not available or were different some time ago. So I don't have a solution. It's just something to be aware of. But having said that, that is why it is always important when you show a graph to try to address at least all the hypotheses you've done in your backtesting. How many, I mean, not only to avoid overfitting, and so of course not all the pitfalls of overfitting, of choosing the parameters a posteriori, etc., but also to try to assess how stable the system is with respect to the choice of some parameters, how significant is your result with respect to a random motion in any kind of like random fluctuation. And so at least to ask yourself these questions may give you a more understandable opinion on your backtest or your strategy or your investment idea, and on how sound it may be.
Yeah, I'm always cognizant of the time. We have spoken a lot, so let me open it up to the people on the floor, and please put your question on the chat, and we can go from there. So there are about 107 attendees right now. So can you put your question in the chat?
Also, Professor, there are a few questions we have received, so I'm just starting to flag them. So if you can pull out the question panel and
Tell us the question. Hello.
Sure, I can do that. So, all right. So this one question is by Srirang. Srirang is asking Bloomberg icon by Reuters has how to use these alternative data platforms for efficient, profitable trades.
So you are saying Bloomberg and Icon, actually not Thomson Reuters, nowadays it's definitive. They have their own pet AI team, quant team who now do AI and give models. But that may be useful. I'm sure people with Bloomberg terminal use some of them, but not to take that in the blindly. So that's what I think. What one need to do is to create one's own model, because then you have more confidence in it. And yes, they have their models to quantify, say, if it was sentiment data, be it news data or microblog data or from chat room. They have their models to quantify it, but these are the data providers who do, and there are many other data providers which are niche. But you have to really, or a team has to really look into it carefully, and do backtest and then virtual trade, so that they're confident to go forward. That's my take on it. Annie.
Well, I think that to me as a quantitative trader, the only kind of alternative that the way that for delivery is via an API. So it's very interesting that oftentimes there are photos of what a power trader's office should look like. There'd be like 9 screens, and then there's all kinds of graphs and this and that on each screen, and a TV open to 3 different TV channels. That's very. I used to, when I first started up, I said, yeah, that I should monitor all this information in order to be aware. But it actually is an absolute distraction. I nowadays when I trade, I have nothing at all in the office, because everything is processed by the computer. My brain needs to be completely disconnected from the world to function. And my brain is only connected to my keyboard to instruct the computer to process information. So we want no data whatsoever that go directly into my sensory organs. That's how we trade.
Yeah, actually, I must say it is not a way to promote somebody, but I'm very cognizant of your excellent website and service of Predict Now, because AI you're using for Predict, and indeed, your sort of support in feature analysis is very excellent. Similarly, Matteo also has a very narrow but a very good way of quantifying, company, if you like, announcements. So I think people should recognize that if you go narrow, you get quite a big payback. Okay, next question, Kitish. Any other question?
Yes, we are getting tons and tons of questions, and many of them are very lengthy. So let me pick this one. This question is by Indrajit is asking, what are the best tools or websites to know the market behavior?
I
Can you
don't
repeat?
know if people
What are the best
have
tools?
market behavior. Anyway, go ahead. Yeah, Matteo.
No, I just wanted to ask for repeating the question. I didn't get the last part. What are the best tools?
Yes, what are the best tools or websites to know the market behavior?
While you're pondering, let me have an initial crack. The market behavior is a wide-ranging word, meaning you need to know whether it's going up, going down, going flat, and it behaves differently for different asset classes. So, as far as I'm aware, there is no one website or there is no one model which can answer. Indeed, it's a kind of alchemy, fools gold. It will be very difficult to get that. Which is again goes back to what I was saying earlier, that you have to create a model, you and your team, and your team has to exercise it, and then have full faith in it. So that's my view. Arnie.
Yeah, so I think that the audience member is probably looking for qualitative information rather than quantitative, because obviously for quantitative information it all goes into the program. It doesn't come from a website. It as I said earlier, come from an API, and it's a machine-to-machine conversation, not a machine-to-human conversation. But qualitative information, I would highly recommend, and I do that myself. Bloomberg's website. You should definitely check it at least once a day if you haven't already. There's a lot of good qualitative information in there, and I religiously read their business magazine every week. So that I recommend.
Bloomberg, yeah. Very good.
Bloomberg Business Week.
Not
that I get any commission.
Bloomberg terminal, yeah. Matteo.
Yeah, there are sites. There are sites or providers that have a lot of data, so they can handle your very general question. The real answer is, I mean, depending what you mean by following the market, because you might be focused on some assets or some other some stocks, on commodities, on interest rates, depending also which is your time horizon. And then a little bit adding to Ernest's answer of before. I mean, he likes APIs because he's a systematic investor. There are other investors that might want to have a picture of the market and complement the traditional data sources of prices, of economic data, information, and news with other alternative, because alternative signals they might follow a company, and there is a provider who provides some information based on I don't know, web trafficking or whatever on that company. So they could complement the information by using other sources of data and then make up their own mind. So, and that in that case, it would not be an API. Probably would be something, a dashboard or a report or something. I'm just saying that it is very much dependent on the investment style to answer these sort of questions, because there is not one single market and one single way of investing.
Okay, let me sort of switch around a bit and ask a challenging question. Now, what is the advantage of understanding sentiment, understanding microblogs, if you like, and chat rooms and alternative data? And by doing that, if you become an expert, how would you fare in the financial market? Would it give you a better career, and why? Arnie.
I'm sorry, I missed what was the.
Let put it this way. We have this course, Certificate in Sentiment Analysis and Alternative Data in Finance. We got various case studies, we have foundation lecture, but the people often ask this question, and I couldn't immediately answer it properly, is this: what is the advantage of learning all this would it make them better position to get a job in the financial market, meaning various organizations, financial organizations, or will it make them a better trader?
Well, I think that my view usually is that the more complicated the stuff, the better it is to look for a job, but it is the worse it is for actually making your own trading profitable. And so it's kind of opposite. So if your goal is to find a job in one of the large funds, dive deep into advanced mathematical, computational, machine learning techniques. If your job is to be an independent trader and actually make money, you should really start simple and find a strategy that may not have a very large capacity, but is so niche and maybe trade so infrequently that no institution are interested. So and you don't have to pay $10,000 a month for the data feed to drive it. So it's actually quite different what you should focus on depending on your goals.
Yeah, on my opinion,
the
answer to the question, if the question is what is relevant for getting a job, I have to say it is a difficult question for me to answer, because even that is such a wide possibility of jobs in the market. And the thing I can definitely say is that there is a increasing interest and growing interest for new sources of data. So it is definitely an interesting field to learn and to be looking at. And especially, I mean, again, this is obvious and everyone knows, there is all the field of learning to analyze data and to process data, either in a simple way or in a complex way, but understanding the basics of what does it mean, and to gather information from data is definitely a field which is becoming more and more relevant as more and more relevant as more and more data are continuously available.
Okay, let me turn it around with each one. First, a question: do you trade with your own money? Number one, in addition to giving advice. Secondly, if you do trade with your own money, assuming that, do you use these advanced techniques or advanced data in doing the trading?
Well, the answer to the first question is kind of a yes and no. I have a fund and I invested in our own fund, so we have skin in the game, but we also manage external investors' money in the fund.
Yeah.
And we use alternative data to a certain extent. We don't have a budget of $10,000 a month to spend on different alternative data, but we do from time to time procure alternative data, and we have research alternative data to see if they add value. So I would say that the answer is a qualified yes to the second part.
Very nice answer. Matteo.
In our case, we do not manage money, so we are not a fund. We do not invest directly on the market. What we do is either we help companies use. We develop a platform that integrates several modules based on machine learning, natural language processing, and statistical methods. And we either help clients implement some of these modules, for example, to develop their own strategy or to validate their own strategy, or we created a number of data sets which are considered alternative data sets, like we measure sentiment on stocks, so we measure the litigiousness of company filings, so we measure a number of metrics on the earning calls and so on. There is plenty of data sets, and Gautam knows all of them, and Ernest might know a couple, but anyway, we give those data, we provide those data sets to systematic investors who validate independently if those information can be useful to enhance their strategies. So then they use them either alone or in combination to create investment strategies. So we do not create investment strategies, we provide signals or data sets. And we don't even know exactly most of the times how the funds use them, because of course each fund want to be want to be able to use them in a proprietary way.
Yeah, we actually do the same. We're starting a hedge fund incubation, but we also do retail platforms in which we trade. Anyway, let me now go back to the floor and see any more questions from the floor.
Yes,
Hitesh,
yes, there are a few questions. So there is this interesting question on Twitter. So about this is asked by Anuj. He's asking, what are your thoughts on Twitter selling blue ticks? As I wonder, verified accounts would be weighted more in natural language processing.
sorry, you couldn't get it. Could you read it out? I couldn't.
Is it possible to see the question on the control panel, because there is a window for that? Because sometimes it's part of the question, I'm afraid that I don't answer correctly.
Is it here in the chat?
You can see, I guess, now questions.
I'm sorry, where is the question? I still don't see it.
I can't see it.
Is it on the chat?
Okay.
It's in the question
window. Okay, here it is. Now great. Okay.
So the ones that I have flagged, you can pick from them. Probably yes.
Is it the last question?
The second last one.
Oh, the second last one. So what are your thoughts on the blue ticks in Twitter? Whether a verified account would be weighted more in NLP. I guess, yeah, I'm not qualified to answer that. I haven't studied it, but perhaps the other panelists would be better suited for that.
Well, not really. We are not working here with socials at the moment, so I don't have a direct experience. I think that your point might make sense to say assign a weight to some sources. For example, when we in a different environment, but in the sentiment indicator based on financial news, we were discussing internally whether we should assign a different weight for more relevant or more well-known news sources. In the end, we decided not to do it. But it's an idea. I mean, if you were looking for a social, you could think about assigning a weight for more verified or more relevant sources. Then there is the matter of deciding how to score each source and how to assign this weight. But in principle, it makes sense. But I don't have a direct experience of this.
Okay. Okay. I'm trying to say. Kindly name the few financial data sources for beginner students. Okay, actually there was a question that are they provided free and this data? Is there any supplier? By and large, most of the data providers will give you 1 month or 3 months trial period. And indeed, if you sorry, it's not just to sell our seminar or a course, but if you join CISA, we have got 2 or 3 providers with whom we have got agreement whereby in order to do project, you can use the data set. And indeed, we have enabled a few students in the past cohort to get some other data set they were interested from the source. So because we have relationship with a multiple number of data providers, we'll be able to help you. So that's the one answer I can give. But in general, even without us, you can go to a data provider, do certain amount of interaction, say, give them some confidence in what you are doing. They will give you 3 months to even 6 months trial period. Okay. Hello. Okay, kindly name a few financial data sources for beginner and student want. Oh, it's a hard one. I don't, you know, So I think what you mentioned, Bloomberg and Refinitiv, they would, if you do what a little hard work. To the universities, you can get access to them, although you have to go through a few hoops. There is one source which is very interesting. It of course goes back to Google, called DGLT. It's called capital D, capital GELT. And they have collected a petabyte worth of information data from all the global as well as local news sources. Now you better look it up, GDLT. Now it needs a lot of research. It's free, but it needs lots of research to filter out the information you need. And indeed, in our course, we have one person, or rather a company, called Western, that's a research in Michigan, in Chicago, who use GDLT data to look at Chinese bond price movements. Anyway, I think it is definitely Northwestern Mutual, Northwestern Mutual, I think it's called, that company. Anyway, so that is one source you can do, but it's a lot of work to get the data you want out of it. But what is interesting, they expect the data to go back to, they're collecting from all sources to even end of 1800 to early 1900. And so the question of historical data is in some way answered. Anyway, so that's GDELT. So what do we got? Ask any more questions? We're coming mostly to the end. I know Ayani has to jump off exactly at 10:30.
Prof, there is an interesting question I can see by Piyush. It's I think a few questions after a few questions at the end. So it's about, can alternative data be used as a sole source, or it should be used as side arm for validation of results obtained from traditional data?
It's a good question. I'm not, for validating what? The results.
Validation of results obtained from traditional data.
Well, you might. I don't know the answer, but I don't see the purpose of it, because if you have something from the original data, by the way, if you're doing a model, something like the quality information from me, maybe 70% will be based on market data, original, what you get from the market. 30% will be from other sources giving you the edge, or somewhere around that. Because what I want to point out, market data is king, and many data providers who has a trick whereby they only show what's happening with sentiment and others and mood, and say they win this way because the market was going up. Don't believe in them, because without the market data, any model is not satisfactory, in my opinion. Matteo and Andy, what do you think, Matteo?
On the question about can alternative data be used as a sole source or for validating traditional data, I don't have any ideas. Meaning that first part of the question, as a sole source, I would say maybe yes, but but also maybe they can be used in combination with other data. So I mean, there is no general rule. You might want to have a momentum strategy and use a sentiment indicator on top of it or without. I mean, there is no rule. I mean, a priori, you can use several features that can be alternative and not alternative and combine them. As a validation tool, you would have to be a little bit more specific in saying which kind of alternative data are you talking about and which sort of validation. So I don't understand the second part of the question, to be honest.
Okay. Right. Annie, I know you
Well,
have to go very soon.
yeah, I think my answer would be no to that question. I think that if we are going to use alternative data, I think machine learning is most likely going to be involved, and you would have to input multiple different types of data as an input to the machine learning predictive algorithm. So alternative data, price data, fundamental data should all be useful. I think it somewhat unlikely that and that's from experience. There's no mathematical proof that's the case, obviously. But from my experience, that although alternative data can help, but it cannot be a standalone alpha driver without any sort of market price input as well.
Okay. So very good. I think the time has come to wrap up this webinar. May I suggest all the people who joined me, thank them, and also people who haven't but will be able to see the or watch the videos. Hopefully, you'll watch them and have get some value out of it, as well as if you have questions, please put them in email and send to us, because these are the things that really we find interesting, because we learn, we as much learn as much we want to tell you what is going on. So please do that. So again, I thank you all. First of all, our distinguished panelists, two of them, for giving up their time. Also the team behind this, that is QuantInsti team, as well as Optimistic and Unicom team, who have worked hard to put this webinar together. And we hope many of you will be curious enough and want to do the course and join us. Thank you very much. Thank you all. Good night, good evening, and good day to all of you.
Thank you.
Thank you.
Thank you. It has been a pleasure to discuss with you. Ciao.
Thank you for inviting.
Okay, thank you.
Thank you so much, Professor Mitra, Dr. Chan, and Dr. Campellone, for your valuable time and sharing all the insights and your experience with everyone. And I'll again repeat myself. We would be happy to answer all your questions. Just make sure that at the end of this webinar, you will be getting a survey. So put your questions in that survey, and we'll make sure that all of your questions are answered one by one individually. Our team will connect and help you out. So yeah, that's about it for today's session, and thanks you again everyone for joining in us today, and I'll catch you in the next one. Till then, please be safe, take care, and have a wonderful day ahead. Thank you.